All right, everyone. Welcome back to the channel. Welcome to Dano Crypto. Welcome to the nightly recap of the cryptocurrency ecosystems. My name is Daniel, aka Dano Crypto. On this channel, we show you guys how to make simple, effective, and easy moves in the cryptocurrency ecosystem. So Bitcoin is testing everyone's patience. We've been going into these little mini bear markets, but I will say that the bear markets don't last that long when they're inside of the bull market, which I think we're still in. I know it sounds crazy. When Bitcoin is doing what it's doing, it's about to test and almost go below 90K. And we are getting that max pain IQ test again that we called on this channel a few weeks ago. And we were pretty dead on. We said at the end of September that we were going to potentially test this max pain level, and we're testing it again, but that does not take away the bullishness of the trajectory of this year for the cryptocurrency space for Bitcoin. So we're going to get into it. Let's go. All right, so you see the you see the thumbnail. This might be the best thumbnail that I've made so far. We have we got our space Pepe, we got Bitcoin going to the moon, we got Sam Bankman-Fried in there, and the infamous Ben Armstrong BitBoy. And so we wanted to remind you guys that this crypto market will break you, but you must stand strong. Because when it comes to investing in something like cryptocurrencies, which is basically one of the biggest disruptors of the financial markets, and we have a bunch of videos and bullish videos from mainstream to prove this point, but the sentiment is so bad right now. The sentiment across most of crypto Twitter is really bad. Everyone thinks it's completely over. We're going to go into a 2-year bear market, but what they don't realize is that the cycles of the 4-year cycle for Bitcoin, and I think even for alts, have been broken. And so there's a completely different blueprint and framework for regulatory clarity for crypto. Operation Choke Point 2.0 has been deceased. You know, there's no Gary Gensler, there's no witch hunt on crypto really anymore in America when we were in the Biden administration. So that's different. We have stablecoin legislation. We got all of the states mostly getting ready to play ball with being able to transact with stablecoins. Small businesses, big businesses, institutions, these different funds are getting exposure into crypto and getting familiar with these particular networks like Solana, like Ethereum, like Sui, like AVAX, and all of these, heavy hitters. So we're going to be covering this. We're going to be covering how ETH is a big player still, and there's no reason to be bearish ETH, especially when it comes to privacy, because we got a nice reminder from Vitalik Buterin to still and to realize that Ethereum has been working on privacy for the past 10 years with ZK technology through Railgun and Tornado Cash and things like that. So if you're bullish on privacy right now and you don't want to be getting pulled into the FOMO of Zcash right now, why not buy Ethereum? It's very undervalued. So I'm not the only one that's thinking this, because Alex Becker, even though I was earlier today, was like, ETH is going to 20K. And I didn't even see this post, but Alex Becker was feeling the same way. He was like, look, ETH's going to $25,000. There's no ifs, ands, or buts about it. $25,000 ETH by January confirmed. And so that would be amazing. If we even get a 7K ETH, I think people would be very much excited about this, because we know what happens when we get an ETH pump. We get the classic legacy ETH memes pumping like crazy. And just as an example, you go into the liquidity and you look at these top memes. You look at things that have been around for 2 years plus. I like to look at the things that have been around for about 2 years plus, and a lot of those are legacy 4chan message board memes that are like Wojak, like Ticker Bitcoin with the backpack. You have Pepe, you have Bog, you have SPX 6900. All of these are, and Pepe. You have contract lore with these, but also they all kind of came around the same time and kind of proved their standing, lasting power with the communities. So specifically with ETH, these things and these coins and these communities understand this with ETH and know that when you hold even just a few $1,000s of these coins and ETH goes up 20%, 25%, even 30%, these coins go up hundreds of percent. So all you're doing is when you're holding these particular coins, and you can do this kind of type of thinking with any chain. You can do it with Solana, you can do it with Sui, you can do it with that, Ava, you do whatever chain you want. This is how you can use this type of mentality and this thinking to basically you're just betting and risking and hedging a little bit deeper into the rabbit hole if you're bullish ETH, or just if you're bullish Sol, then you would probably be holding some of those fundamental tokens inside of the Solana ecosystem. And we've explained what those are too. So this is how you're going to really perform well. No leverage. You don't even have to leverage. You're going to be able to get hundreds of percent over a span of time when we go back into inflows. The only reason why we're having this downturn is we've had outflows of the ETFs. The outflows on the ETFs have been pretty strong on Bitcoin and Ethereum. You can see, look, it's just been outflowing. Bitcoin, look, you can see outflows, mega outflows, and people are wondering like, oh my gosh, everything's dying. But look, this is just the ins and outs of the institutional money flowing in and out. And so we've seen this before, and all it's going to do is just reverse. And why I think it's going to reverse is because the focus right now, I think, is getting Solana ready for multiple ETFs, XRP, multiple ETFs. All of these are getting ready. Ethereum is getting ready. These staking pending ETFs where they're going to have staking was stalled because of the government shutdown. So now, because the government is open now we're going to be able to get this stuff cranking. All the dates that were supposed to be, pending for these to be able to get staked are now going to start to go down the pipe. And it all just lines up with Binance offloading and selling as well. But all they're doing, it's not like they're selling to just get out of the cryptocurrency markets for 2 years. No, they're selling and then they're buying back. They're selling and then all they're doing is they're just buying back at lower prices. They're just doing a rinse and repeat. So I see no reason to fret, and I think we should just all relax a little bit. That's just my personal opinion. And I think Vitalik thinks the same way. With his outfit, this is such a statement of chill bullishness, like just coming in like a superstar. This is the ultimate dev outfit. I'm glad my dev looks like this. That's like between him and Richard Hart, we're looking good. Between him and Richard Hart, we're looking good. And make sure you guys are hitting that like button. I really appreciate it. We're doing a short stream. We're going to stream till about 8:30, 8:45. And I want to tell you guys about this ProveX because it's really fascinating, and I'm starting to understand what it is now. And it's so crazy because it ties into what I'm getting bullish on, which is the Zera Labs, which is this zero knowledge era ZK proof technology, but inside of a protocol. That's literally what ProveX is. It's exactly the same thing. But what it's showing is a dashboard of chains. Okay? Now, if you pay attention, people are able to sacrifice using these particular chains, and there's a leaderboard, and you can see what people are sacrificing. You can earn points for what you're sacrificing. I think the sacrifice is not what you should focus on. You need to focus on what chains and what coins are able to be sacrificed, because I think that's the key. These are the coins and the chains that you are going to be able to use inside of ProveX whenever it launches. Because if you connect your wallet, you realize there's a wallet inside there. Right now, it's just Ethereum. You can receive and send Ethereum tokens, and you can buy inside of this wallet. But I think eventually what's going to happen is this is going to be pretty much what Zera is. But I don't know how exactly it's going to operate. But I've been seeing the cryptic, posts from Richard, and it's making me think that's exactly what he is doing. He's building a ZK type Ethereum proof, because he's it's a layer 1, but it's a basically like an Ethereum with cheaper fees, but with this particular ProveX technology that might have this ZK proof thing going on. That might be what he's building, and all of those chains that you're able to sacrifice is the test to be able to send and receive using those particular chains as the throughput. I think I got it right. So, and it's funny, I always remind people this too, because people think still that you have to buy a whole Bitcoin. Like the regular person that doesn't know about crypto, when they look at cryptocurrency and they've never invested or haven't bought any stocks, because people don't know you could do like fractional buys of stocks as well. It was never like that back in the day. Like you mostly would have to like kind of agree to like contract, like, okay, I'm buying this many shares. But then everything, because it's digitized like through Robinhood and all these different stockbrokers, like you can buy fractional shares. It's a lot easier now. So the same with crypto. Some people don't understand that you can just buy pieces of crypto. It's like me and you, or whoever's watching right now. Like, I don't know if there's like someone who's never been into crypto is watching right now. Like put a 1 in the chat, or sorry, put a 2 in the chat if you're brand new to crypto. Put a 1 in the chat if you're seasoned, like Laurie's. Put a 1 if you're seasoned. You know what I'm talking about. You know that you can buy pieces of Bitcoin. You know you can DCA. You can buy $5. You can, whatever. You can buy $10, $15. It all depends on the service. There's minimum amounts, but mostly it's like 10, 15, $20, so. Put a 1 if you already know this. Put a 2 if you're like, oh, crap. I thought I had to buy a whole Bitcoin. I thought I had to buy a whole Ethereum. You can DCA that Ethereum 100%. All right, so let's go to this particular post. Where is it? Let's find it real quick. Justin verse 4896. Okay. All right. Well, now you know. Now you know you can, it just depends. So if like, for instance, like if you're using MoonPay, you can, I think you could do like 15, maybe 10, 15's the minimum. $15. And sometimes I think it depends on the crypto too. Like I think with Bitcoin, it's like minimum purchase is $20 because of the nature of the network fee. There's a more expensive network fee when you're buying your DCA and something like Bitcoin. So it's usually, that's why the minimum is $20, because it's like if you're buying like $5 of Bitcoin, it's going to, it's not really going to cost you more. But it's funny though, back in the day, you could have bought $5 of Bitcoin and have bought 5 Bitcoin with, or $10 of Bitcoin, $10 could have bought you 10 Bitcoin back in the day. Can you believe that? That's just wild to think of. That is wild to think that really only 10 years ago, you look at the Bitcoin chart and it's, I said Max Payne was here and we were right, but now I'm like, just kidding. It's actually here. This is where it is at this order block, because remember, we crushed the order block of the Lux Algo order block at 98,000. So we went below 100K and everyone was like, oh my God. And then now we've kind of been skirting between the bear, because we got bull trapped basically right here. Like people were starting to kind of get bullish. They thought we're going to have a V-shaped recovery. But then there's some people like, nope, it's a bear market. We're going into a bear market. That's it. This could be the line in the sand. Right here. 89,257. I mean, it's so close to it. I mean, I mean, why not? If that's where the liquidity was sitting last time to be able to scoop it up, that makes a lot of sense to me. If you're wondering where Bitcoin could potentially go here, and it's really kind of starting off the week pretty spicy. Starting off the week pretty spicy here. But if you guys have been following the Richard Hart stuff with the ProveX, what do you think? Do you think I got it? You think that's what it's actually going to be? And the coins that you're sacrificing, you're probably just going to get most of them sent back to you through the protocol, but then like maybe some of it will be used for your airdrop, because it says it could potentially, your sacrifice can be sold and you will receive no benefit from it. You understand what you sacrifice can be sold, but maybe it won't be. Who knows? That's why it's you got to, sometimes you do have to play some of these games in crypto, because if you're going to be in the most interesting things, the most asymmetric upside things, they sometimes can be a little bit cryptic. They sometimes can be just a little bit cryptic. Like, for instance, look, Richard Hart with this cryptic text. Imagine if someone came up with a solution to on-ramp and off-ramp to all chains, removes middlemen, replaces trust with math, great tokenomics, figures out a way to get people to use a better chain, gives people something new instead of the same similar stuff over and over again. Imagine it could replace trust with proof, ZK, in all kinds of industries. You'd have to be dumb to shun such an idea. It sounds so similar to what we were just explaining in today's earlier live stream about the zero knowledge proof era of crypto that will be powered by Ethereum, but also the layer ones and the layer twos. And then also protocols that can be built on Solana that can input an interface with other chains, which is what Zera is going to be able to do. But then also this is what ProveX is doing as well. Because look, on BIP32, on the Bitcoin network, you can send Bitcoin. You can interface with EVMs with all the layer ones. You can see, look, you got, I think that's Balancer. You got Arbitrum. You got 77 different EVMs. You got the Solana, or is that token? Yeah, no, it's the tokens. Look, Arbitrum, Solana Base. That was the tokens. Arbitrum 1, Solana Base, Binance Smart Chain, Pulse Chain, Ethereum, Optimism, Avalanche, Ripple. And what's funny is that all of these these particular chains are not too bad themselves. Like, you could be bullish on Stellar Lumens, like it's a pretty OG chain. It was one of the first cryptos actually that I bought. Then you have Hyperliquid. You have people are so bullish Zcash. But I think Zcash is a psyop to get you to be distracted from Bitcoin. I think all Bitcoin forks are distractions from Bitcoin. You can see it takes Litecoin, it takes Bitcoin Cash, it takes a lot of stuff. We sacrificed $20 so far, but we're going to sacrifice a little bit more because there is still 14 days to be able to get this particular rate, which is a bonus points. Yeah, the thumbnail was just a reminder that crypto can break you. It can bring you from the bottom all the way to the top and then smash you like a rocket nuke into the ground if you are not strong-willed and you let evil forces take over you, or you let greed, you let all of these things get the best of you. And I think crypto could probably do that to someone the fastest out of any industry if you end up coming from it from nothing and then making a lot of money and then not having your head on straight. Because then if you combined all that, that is a cocktail of disaster if you're not prepared for it. So I think it's a good reminder to make sure that you always kind of check in with yourself and make sure you are taking care of your family, you're taking care of yourself, your health, your mental health, and you're checking in on your friends, you're checking in, just because this thing, crypto, this investing, and, we have fun and we're supposed to have a good time, but sometimes it gets a little serious because when it comes to money and people losing money, or hey, say you got rugged or you got hacked. I mean, there's so many different things that can happen to you in this space where you could lose it all. You could have a bad business deal go south and then you lose it all because maybe you signed a really terrible contract. I mean, I don't know. You could have all kinds of stuff happen. So just make sure you are keeping a healthy hygiene in the crypto space and protecting yourself. And so that is the nice, healthy reminder. And shout out to everyone who's here. We got AOKG in the house. He said just in time for dinner. We appreciate you coming back for a second time. And I think we figured it out, man. I think we figured it out. I was like, I figured it out. You're basically doing what Zara's doing. And, okay. Real quick. Oh, yeah. Yeah, that 89,000 right there is looking pretty nice. That's actually looking pretty nice. And if you're looking to DCA, like if you've been looking like to acquire stuff, I mean, gosh, this is just the perfect time. We were talking about it, me and Headband, we were saying, what other time? We've never been in a time of extreme fear where we haven't bounced in the crypto space. So if you were to go in the history, I would love to pull out the full history of fear and greed, because it's only given me just like from 20, but this is still fine. I mean, even just going into these points, we'll just reference just from 2023. Because we're about to get into 2026. So even just in these times, anytime we've been into extreme fear or fear in general, we've bounced up into extreme greed. Because this is where the millionaires are made. This is where people make the most money, is quote, in the bear market or in the little bear markets, because we're in a bearish situation right now, no doubt. It is pretty bearish if you're looking at it in terms of like the short-term price action looks like garbage. If you're a shorter and you're a trader and you're in and out kind of taking advantage of this, I mean, you're having a heyday. But remember, when you make money that way, people are losing. So, I mean, you better be praying at night. That's all I got to say. Jesus loves you. That's why I think I was like, man, I wondered why I felt so bad trying to trade and do that, because I was like, I feel like I can make money in a better way than thinking that I'm taking part in some kind of, I don't know. It just didn't feel right. It just didn't feel right to me. And it proved that the more that I've been away from it, the better that I feel. And I started to notice that with alcohol too. Like the less that I drink, the more I'm like, oh, I like myself better when I'm not feeling that shitty feeling at the the next day, which is what I would feel trying to trade. Even if I was making money, even if I made a good trade, I still felt like a euphoric, like almost like people who do hard drugs. They come up, they're like super high and euphoric, and they're like, yeah, bro. And then the next day they're super crashed and like totally blasted out and blown out. And that was how I felt. That was legitimately how I felt. So, and I was like, I don't want to do that anymore. I think it makes more sense to go back to basics. And so the basics is to accumulate and buy during extreme fear and doubt and just like insane volatility. That's where the most money is made. And it's hard to switch your brain, because if you come into the cycle or come into crypto thinking that you're going to become rich, that's already you got to learn a thing or two, because like investing in general, I mean, like even if you're investing in the stock market, you can't expect that the moment you start investing, like I'm going to become rich, It's more of a long game. It's like you want to just be kind of just playing the long game and know that when there comes to presidents and geopolitics and the price of oil, I mean, think about the connection of the price of oil when it comes to everything, and water and power and energy and all that stuff. Like it's way more than just like, oh, price up and down, Bitcoin volatility. It's like there's a lot of stuff that happens, but it is sometimes cyclical. Some of the things have a business cycle, like we hear about what the business cycle is and where there's more liquidity and when there's not. There's all these things that have to do with the way that money's flowing around in the world. A lot of it's been flowing into gold. We've seen a lot of currencies been flowing into gold. And we've seen the dollar strength go down. We've seen the dollar represented by the Dixie going down. And so, what do we do with all this? Well, you do have to know that if you look in the past historically, and we'll just use like the S&P 500 is a great example of looking into where we've had a lot of volatile things, black swan events. We've had, we'll just use 3 main events on the monthly chart of where we've had some pretty interesting volatility. Okay. The elections, the election and all the things that led up to the massive crazy stuff that was happening with the attacks on Trump, and then the debates, and then Biden stepping out of the race, and then it was Kamala, that was very volatile. Okay. So that was so in our reference of time of what's been happening. I mean, there's tons of stuff that's been happening. Oh my gosh. I mean, you just you just kind of lose count. I mean, you keep going, and I could go off of 10 fingers off of what we've experienced just in the past, just in the lead up to the Trump presidency, and then the past 6 months. Insane. I mean, there's been so much stuff that's happened. So we're just going to go off like the obvious ones. We had the lead up in the early 90s going into the dot-com bubble. And the dot-com bubble happened in 2000, starting in May, where it topped out in May, and then it bubbled down. And into 2001 and 2002 was where it eventually bottomed. It went down, though, from there, it went down 50%. And people were probably like, it's freaking over. Pack it up. Like, it's over. The internet was a sham. Like, email's never going to go back to the facts. Like, that's like how people were probably talking. And then it recovered. It did this V-shaped recovery. And then it freaking smacked people again. I mean, imagine that. Doesn't the cryptocurrency market do that? It does that too. Bitcoin does this all the time, where it'll go up, boom, boom, double top, smack you down, and then you think it's really over. But then from there, this was what was interesting. What was this? This was the 2008 crash, the 2008 financial crash. That was the next one. So it's interesting from the 2002, you go up, get 6-7 years of a run up. Then we get the 2008 financial crash. So that was the next one I wanted to reference. Then from there, we'll just go all the way to COVID, because then from there, it was literally game on. After that, it went up all the way to January 2020. We'll just use like right before of going up 402%. This is just the S&P 500. Okay. So even during all of that, get so much volatility and all the doomsayers, and it still ends up recovering. And so what are people thinking is going to be the bubble this time that will crash it? Can you guys guess? What do you think is going to be? What is the bubble that everyone's saying that's going to crash? And that's super overvalued and is due for a massive correction. It's AI. Because Nvidia, like Zero Hedge just pointed out, is valued at $5 trillion. It's $4.5 trillion, or valued at around $5 trillion. I'd like to see what it's at now. We'll go to asset market cap. Asset market cap. Yeah, it's still up. Yeah, shout out to the guy who made asset market cap. He just made this of his own accord. He was like, I wanted to just have a nice, simple market cap aggregator. So we've always liked pulling this up. So shout out to asset market cap. Yeah, Nvidia is valued at so it's still at 4.5 trillion. Recently, the 24-hour change has been down 2.2%. But look at what Nvidia kind of powers, because they all are held up by Nvidia, apparently, according to this bubble chart. So that's why people think that even with the S&P 500, only like a very small portion of the companies that are in the S&P 500 are actually propping up, and also in the stock market are propping up what the price action is, and all of this leg up is very heavily influenced by the tech stocks. But I guess the point that I wanted to make here, using the S&P as a reference, is that look at the total cryptocurrency market cap chart here, and then look at gold as the blue line. This blue line. Maybe we'll edit the color here, and we'll make it a little thicker, and we'll make it, I don't know, I guess we make it gold, eh? All right, so, and you see how, if you were to look at this chart in an inverse, like gold has just seen the first initial hedge pump out of the dollar, and this is a representation of world currency debasement liquidity going into gold. And gold right now is at 27 trillion. If my theory is correct, the United States is setting up for one of the biggest chess moves ever to sell our gold at the highest market value they can get it, which is around where it is right now, and then to buy Bitcoin with it, because they don't want to buy Bitcoin with tax dollar money. They don't want to buy it with printed money. They don't want to buy it with anything like that. They are going to literally sell the gold and then they're going to set up a Bitcoin standard and reserve. And this is how the total cryptocurrency market cap ends up going to match exactly where that gold line is sitting. It's essentially the same chart. It's literally the same chart. Gold just doesn't have the volatility spikes like crypto does. Like crypto is obviously going to have, it's a disrupting technology. Gold kind of was sideways, and we all pointed this out too. If we pointed this out on the chart, that gold, the only reason gold ended up seeing the price surge that it did was because of the ETF in 2005. When the ETF was issued in 2005, that attributed to the growth of gold as a way to hedge into it in a different type of way with an exchange traded fund. So just like how these ETFs with Bitcoin and ETH and XRP and Solana and all AVAX and Litecoin, and that's the same thing. So that was in 2005, and now look how much gold went up. And you don't think that these particular cryptos, it's not going to be every single one of them, but some of these particular cryptos that are picked for institutional inflows and outflows through the modality of the ETFs, that's the same type of price action that we can see with our altcoin bags. And man, I would say the list of sacrifice chains and coins that are on here is actually pretty decent of an altcoin bag that you could hold. Besides, I would exclude some of them. But you got Sonic, you got Dogecoin, you got XRP, AVAX, Polygon, Bitcoin, Arbitrum, Pulse Chain, ETH. We got Julie Kenneth in the house. What's going on, Julie? I hope you're doing well. We're gonna be streaming here for just a couple more minutes. We're not doing a super crazy 5-hour, marathon stream. We could do it. But yeah, I'm talking about the ProveX sacrifice because I finally guessed it, because I've been reading all the cryptic texts. I've been following this for a little bit. I tested it out. I connected my wallet. I sacrificed like $20 of ETH on base. Let me see if I'm going to connect it real quick. Let me connect it so then you guys can see it. Give me just a second. And I used my Brave wallet. I really like the Brave wallet. I don't know if you guys use the Brave browser, but I use both. I used Firefox for years, but I noticed for Web3, Firefox kind of sucks. And I've noticed Brave is built for Web3 and wallet technology, and it has its own wallet and it's multi-chain. And so the more that I started to morph over and do all my kind of crypto stuff on the Brave browser, I like it a lot better. And it works. Like for instance, like Nakamoto Games operated like garbage on Firefox, but Nakamoto Games on Brave was like, worked really well. Okay, give me a second. I can't remember. What? Oh. This is? Okay. All right, sweet. All right, so I'm logged in. Brave, yeah, the Brave browser has a wallet and it's really good. It has a Solana. It has a Solana address. You can hold Bitcoin. You can hold all the EVM stuff with ETH. Gosh, what else is in there? Yeah, it's a really good wallet. And a lot of the applications and applications on most of your Web3 stuff, it supports it. It'll notice it, so you can just kind of connect right into it. That's why I've liked it. So what I'll do is, if I don't want to use my like main wallet, like for connecting with stuff that I'm like kind of sketch, like I don't want to really I don't know if I want to connect to that, I just send it to my Brave wallet. that's like my test wallet, you know. So yeah, I sacrificed $18.78 and I acquired 188,000 points for doing so. I have one sacrifice, I used one unique coin, one network, and it shows it right here. So that's how it works. And then you can see recent sacrifices. So far, there's been about $2 million in sacrifices made. And I'm curious, how many of you guys have sacrificed? How many of you You're like, I've sacrificed so much, sir. I've sacrificed so much. One of our memes was like that. We said, we've sacrificed so much, sir. It was one of our thumbnails. Where is it at? That's kind of how it feels right now in crypto. Like, we've sacrificed so much. Why do we have to bear this pain of volatility? Well, it's because we all got convinced to be gamblers. And so your brain has been dopamine destroyed and greed destroyed, and you think you are supposed to get rich in 2 months by not doing any work. That's what people think. That's what most people think. They think that you're supposed to get rich in 2 months by not doing any work at all. No struggle. No testing out stuff, not trial and error. No, just 2 months and a hope and a prayer and a trench dream. But that's not the reality. It takes a few years. It takes doing something really stupid. It takes losing it all. It takes actually holding through volatility when it feels like you're probably going to puke. Like you have your hand on the sell button and you're like shaking. You're like, and like you're like about to lose it. That's what it takes. And then you will appreciate when you actually make it and you get through the volatility and you get to the end of the pot, the end of the rainbow, the pot of gold. I think it feels better like that. Because you always hear the stories of the people that make it really quick, or even the people that win the lotto. Like people that win the lottery, those people end up blowing all the cash because they don't even know what to do with it, and a lot of people end up losing it, which is fascinating to me, because you'd think, I would do what I would do. But would you? How responsible would you be? I don't know. But guys, this is going to be okay. You got to stop leverage trading and you'll probably feel better. I think because it's really tricky, because like we get, especially when I really do think we are still in a bull market. I know that's crazy. You're like, you are insane. You have to have mental illness if you think we're in a bull market right now. Bull markets have many bear markets inside of them. And they're meant to be in there to trick you. They're in there to trick you. And you just have to spread out your time horizon a little bit. You just have to spread out your time horizon a little bit and know that the most money is made in extreme fear. Is there's not, I would have, they should have a fear and greed index on TradingView. Do they? They should. Oh, there is one on SoValue. Okay, let's look at that real quick. There is a fear and greed index on here, I believe. Because I want to look at the like a long history of the fear and greed index. Let's see. Oh, okay. Here we go. All right. This. All right, check this out, guys. And smash up the like button if you're here. We're going to go till 9 o'clock. Well, you know, why not? We got a couple minutes left. We got people in here. We really appreciate you being here tonight. I figured there would be a nice little group of people coming in tonight because the Bitcoin price is just doing its thing. And I need to come to the camera here, to the timeline with some bullishness because people are going to be like, oh, you know. So just, I want to show you that look at all the times. And what's funny is that every time it has been an extreme fear was the setup for one of the biggest altcoin runs we've ever seen each time. So this is represented in historical data for the CNN Fear and Greed Index from 2011 to 2025. This is measuring historical investor sentiment on just the stock market. But this is pretty relevant to the crypto, because let's be honest, like the crypto markets are all based on what's happening with big money inside of the NASDAQ and the just all that. Like when sentiment's bad there, it's pretty much going to be bad in crypto, and it kind of correlates and trickles down or up, whichever direction it's going, but sentiment wise. So it's still connected. So look at the fear where we had the biggest altcoin season in 2017. Okay, look at where the fear was, extreme fear. And then look at what happened. It spiked into 2017 into like massive greed. Okay. So then you go into the extreme fear that we were in 2019 in COVID, actually, before COVID. And then actually it was weird because if you see, right in 2019, the beginning of 2019, we were extreme fear, and then we rallied up into greed. And then we kind of bounced around a little bit. Then we spiked up. And then in March is when we had the shutdown. I remember the day that the shutdown actually happened because I was working a gig, and I remember everyone. It was just like we got the basically like the official announcement that you need to shut down your establishment, and we were just like, okay, I guess this is actually happening. I remember, and so that was extreme fear, and we rallied up into extreme greed from there, going into the end of the year of 2020. And then slowly from there, it took a little bit, but then we went back into extreme fear in 2021 because then we were now deep into into like weird mask pandemic, false narrative, weird stuff going on. Oh my gosh, it was just like those 4 years from 2020 going into now was very strange. But you can see that it kind of just bing-bonged around between being moderately neutral and then going into greed, and just eventually then now we're at this same level where we've hit this extreme fear, right here in the beginning of the year because we had that Trump dump, and now we're back. But you look where it's did this, and it has that double spike, so it gets a double bottom of extreme fear that ends up sending us back into rallying. That's why I'm not so worried. I'm not really too worried. I'm not really too worried. Okay, so end of this live stream. We're going to play a couple bullish clips. I appreciate you guys coming in. Let's play this new clip from two of my favorite people, Matt Hogan and Tom Lee. Let's go.
With your kind of high-level view here, what do you think is really going on? Tom, let's start with you first.
Well, Leslie, I think the markets are a bit nervous in crypto land, in equity world, because one, we've had a government shutdown, and then there's been doubts about AI valuations and people raising questions about that. So AI stocks have corrected, and many growth stocks have corrected. And then in crypto specifically, it's been dealing with two issues. One is there was this big liquidation event on October 10th.
Okay. Why don't these guys that have so much money, why don't they ever have a freaking microphone? Like, I don't understand. Like, that's just driving me insane. Like, these guys deal with so much money, but they can't go to freaking Office Max and go just get a damn microphone? Go get a microphone.
One that really was a larger liquidation event than anything seen in history. And the second is because crypto is risk on. I think markets are really struggling with what the Fed's going to signal on December, because, you know, if you end up with a hawkish Fed, it gets crypto investors very nervous. I think that's
okay. So he's mentioned about the hawkish Fed. So I know you like got to keep it cheap. That's how he has so much Ethereum. He's like, I haven't bought a microphone in 17 years. I've just been acquiring ETH for Bitmine. Okay, so this is pretty. Okay, so we had the poly market actually up already. Fed decision in December right now, okay, is 55% now, no change. 55% now, no change. We were at just a few weeks ago, a 90% chance that we were going to cut in December. And now it's looking like there ain't no cut in December. But who knows? I mean, this is literally diverging now, and it's completely diverging. Because look, like I said, look, it was at an 89% chance that they were going to decrease, and now it completely just diverged into a cross. It just did a death cross. Yeah, Tom Lee's just been buying hair cream to make sure his hair looks perfectly wavy and full and thick, instead of buying a freaking microphone when you're on a freaking national TV. That's why it's like, I know I'm going to make it. I've been training myself. I've been training for the day. My wife would be like, please, Lord, for the love of God, can you please make it so then you can have your own studio and stop yelling in the other room? That's probably what she's thinking right now. No, my ass will be prepared.
That's all creating this downside pressure. But I think the good news is there are signs of exhaustion. I did speak with Tom DeMark of DeMark Analytics, and you know, he thinks there are signs that would look like a bottom that could be occurring sometime this week.
Matt, do you agree with Tom here?
I actually do exactly agree with Tom. I think we're nearing a bottom. I look at this as a great buying opportunity for long-term investors. You know, Bitcoin was the first thing to turn over before this broader market pullback. It was sort of the canary in the coal mine, signaling that there was some risk in all sorts of risk on assets. I think it'll be the first thing to bottom, and I agree with Tom. We're getting very close to that point. So I think it's an exciting opportunity, again, for people who are looking out a year or more into the future.
Tom, kind of digging into Ethereum a bit more. What do you think are some of the idiosyncratic drivers here? Are there things that you think may be due for more of a decoupling from just the broader risk environment or crypto as well?
Well, Ethereum is a smart contract platform, so it differs from Bitcoin, which is a store of value, and in many ways its virtue is that it's inert, and it represents digital gold and a good store of value. Ethereum, on the other hand, is, because it's a smart contract platform, is really the rails where I think a lot of things are going to be built. And one of the big breakouts this year has been stable coins, but it's also been things like prediction markets, and now talk about tokenizing more than just dollars, but equities and real estate and alternative assets and other assets. And a lot of that will be built on Ethereum or layer 2. So I think from a perspective of what the ecosystem looks like, Ethereum is a place where there's a lot of activity taking place, and you can measure it by transaction volumes or transactions per second, or even value locked on the chain. And these are all rising. So to us, I think it's a story that still is in the earliest stages, and one of the reasons we consider it a super cycle.
And Matt, you agreed. You said that you agree with Tom that it's nearing a bottom. How much of a long-term buy do you think this is?
I think it's a generational opportunity for long-term investors, whether you're looking at Bitcoin, Ethereum, or Solana. To double down on what Tom said about Ethereum specifically, look, I think investors are very nervous broadly about the economy, about AI valuations, about tariffs, about the broad economy. You want to look for secular trends that are decoupled from that. I think regardless of what happens on the economy in the next year, stable coins will grow tremendously. I think regardless of what happens, tokenization will, maybe 10x in the next few years. Prediction markets are going to be huge. Decentralized identity and digital identity are going to be huge. Ethereum lets you play those secular trends, which are in this enormous growth phase, almost regardless of what's happening in the broader economy. So for me, it's really, it's a generational opportunity. And to get in at these prices, I think really is almost a gift for long-term investors. It's a tremendous opportunity.
Tom, in terms of just the overall volatility, what are some of the near-term headwinds you're expecting Ethereum to face?
Well, one of them is the industry did suffer a big liquidation event that I think crippled many players and wiped out many accounts. So I think that this, just like in 2022 or in 2020, it does take a few weeks for the industry to sort of find its footing. And I think that's why crypto prices have lagged here. And it does have the signs of that maybe a market maker or two actually is unable to provide market liquidity. And as you know, as liquidity contracts, it's the same thing as the central bank tightening. So it's almost like crypto QT. I think the other thing the markets are grappling with is people talking about the 4-year cycle. Many are convinced that Bitcoin prices have peaked. So in some ways, Bitcoin being the blue chip and the bellwether is important for crypto, because if Bitcoin makes a new high this year, then it really obviates the fact that there is a 4-year cycle. And so it's, to me, between now and year end, I'm pretty bullish on stocks. This sort of weakness in the first half of November was what we expected. But as markets rally, I think that's going to help propel Bitcoin to an all-time high.
Tom, we can't let you go without asking about Granny Shots. That ETF recently celebrating its 1-year anniversary, gathering $3.6 billion in assets in its first year. You plan to expand the lineup. How do you plan to do so, and where else on the court will you be shooting from, so to speak?
Yeah, well, that's right. Granny Shots, which refers to a way of shooting free throws, proved to be very popular with investors, as you point out. And part of it is the performance. Granny Shots in its first year outperformed the broader index by 1,000 basis points, and year to date beating the S&P by more than 1,000 basis points. The idea of Granny Shots is the idea that there are super cycles, themes that last for more than 5 to 10 years, and we want to buy the strongest stocks. So we are expanding the Granny Shots family. That they're going to go effective tomorrow. One is a mid-cap Granny. So this is taking the same Granny model, finding the 7 super cycle themes, but buying small and mid-cap stocks.
You're going to be able to do this with basket crypto ETFs. So that's what is being offered with Grayscale. I think eventually they're going to have a basket. There's going to be a bunch of them, basket ETFs that have XRP, Litecoin, AVAX, everything. Not everything, but at least like the top heavy hitters. And you'll just be able to get exposure into, you'll be able to get exposure into that. Or at least certain types of money and liquidity will be able to get exposure without directly buying the asset. But these funds, they have to have the asset. They have to be holding the asset because that's what's servicing the ETF. It's the same thing that why we were bullish the Bitcoin ETF, because we know that when ETFs go live, that the funds and the people that are servicing them have to be, they have to have the Bitcoin. And who was selling in the Bitcoin? Well, it's been like Binance and Coinbase and all the exchanges who are basically accumulating the Bitcoin all through these years. So interesting enough how that has switched. That's how the Bitcoin balances have moved and have went from owner to owner. You know. The exchanges, the people that were mining Bitcoin in the early days, they're now transferring to BlackRock. And the people that are servicing the ETF. So it's kind of like with Grayscale. Grayscale had their trust, and then they turned it into an ETF, but then they had to sell all the stuff, all the BTC, but who was buying it? It was BlackRock. But that eventually sent Bitcoin into all-time highs. We just have to see. We just have to see what happens. But I'm not going anywhere. I'm not leaving. I don't know about you guys, but I'm already too deep into crypto. I got to figure this out. I got to figure this stuff out. It's the only way. It's literally the only way. I'm kind of like mad about this now, like mentally mad to figure it out. I will work every day to figure this out. And I want you guys to figure it out with me. Because we are very much early adopters to one of the biggest disruptors, I think, in history for finance. And if we can play our cards right and not F this up, we're going to retire our bloodline. Like that's like, we always make that joke or we make that reference. Oh, retire your bloodline. Like we're not joking. We're serious. When we say that, we want to retire our bloodline. I want my daughter's kids and her kids to be eaten off of my plays that I make right now. Damn it. If God is my witness, that's what's happening. So, and you're going to have that same prayer. You're going to have that same call, that same conviction. What else are we here for? We got to leave our people set up. And I think we might be in the right place to do so. But it's going to take some time. It's not going to happen in 2 months. It's not going to happen in the trench in 2 weeks. But you're going to have to build something. Build something. You're going to have to feel good about what you're doing. And I do think, and I really do believe that crypto is that place. Where I don't see anything that has the biggest asymmetric upside and utility of what the freaking world is going to be eventually using. This is it. There's nothing else. There's nothing else that is cooler than this, more bleeding edge technology and culture than this. This is it. So welcome to the real world.